The Lok Sabha has passed the new income tax bill. Now, what really are the big changes and what does this mean for you? Well, the new income tax bill aims to replace the 6-decade-old Income Tax Act of 1961 and make it all simple to understand. Remember, Finance Minister Sitharaman used the acronym in February when she first tabled the first draft of this bill to refer to its guiding principles of being simple, quite literally. Those principles are streamlined structure and language, integrated and concise, minimized litigation, practical and transparent, learn and adapt, and efficient tax reforms. That first draft was then referred to a select committee led by the ruling BJP's Bajaj Panda really, and the committee made 285 suggestions, which most of them have now been accepted, said the finance minister. Apart from simplifying the language, the new income tax bill clarifies deductions and strengthens cross-referencing across provisions. It also introduces clearer definitions for terms such as capital asset, micro and small enterprises, and beneficial owner, while aligning tax treatment for pension contributions and scientific research expenditures. Some proposed changes then in the new draft are relief over tax refunds. Taxpayers can claim refunds even if in the case of late filing of returns. This, remember, was not so earlier. The no penalty on late TDS filing. There will be no financial penalties in case of late filing of TDS, nil TDS certificate. Taxpayers who don't have tax liabilities, that is, they don't pay income tax, can claim the nil certificates in advance. This is applicable really to both Indian and non-resident taxpayers. Commuted pensions, there will be an explicit, in the earlier draft, it was an explicit really tax deduction for commuted pension, a lump sum pension payment really for all those to understand. And for certain taxpayers, this applies to those receiving pensions from the specific funds, such as the LIC pension fund. Intercorporate dividends, deductions for intercorporate dividends, that is dividends a company receives from shares held in another company and has been reinstated. So as under the section 80 really. Property tax clarifications also to calculate tax on income from housing properties. The standard deduction has been set at 30%. So all these really are the changes that have been proposed. And of course, what else really is in the new tax bill? Among the proposed changes are also amendments in the concept of a tax year, which will replace the use of terms such as financial year or accounting year and make it simple for people to understand really. So really the aim is to simplify and make it all more understandable and readable, to remove redundant and repetitive provisions, and of course help reorganize sections logically to facilitate ease of reference.